today for the futures market. Same story, different day. We keep things fairly simple here. We're just going to run through the numbers, see what's going on. Watching, starting over here with the S&P on the left-hand side. Had opportunity yesterday for a long, and we can see market pulled back, made lower high, lower low, and lower high, lower low. Gave us the green arrow saying, hey, watch this. If we break out the top of that previously closed lower high, we might want to look at long trading opportunities. And we can see here, it did break out the top of that. Didn't go far. It pushed up a little bit into profit here, and then ultimately came back and would have stopped us out right here for about a 2.5 point gain on that one. So not a big win, but a win nonetheless. We'll take the small ones along with everything else, right? So today, same situation. We've got a long bias on the 4-hour, long bias on the 30-minute. That tells us that we're looking for long trading opportunities. That'll look like the market pulling back, making lower highs and lower lows, and then we'll just play a breakout of the previously closed lower high. We are hitting a bit of a, where my bar went over here? That's weird. It's really strange that disappeared. In fact, disappeared across all my charts. Anyway, that's kind of odd. Hitting a bit of resistance up here at the top around this 38, 35 area. So we see some resistance, 38, 35. Certainly if we can break and close above 38, 35, I think we'll see a lot more opportunity to the long side here, which is in the direction of that current market bias. So keep that in mind. If it does reverse and starts falling back, the indicator will keep us out. As long as we're making lower highs, and just keeps pulling back, then ultimately we won't have an opportunity to jump into that. So the indicator will keep us out of a trade, just like it'll get us into a trade. So anyway, we just follow along with the process and let it do its thing. Over here on crude, same thing, and it's weird that I lost all of these. I don't know what's going on with that. I clicked reset a minute ago. Anyway, on crude, same deal. We're looking long trend. The bias on the 4-hour is long. The bias on the 30-minute is long as well. So we're looking for long trading opportunities. That would be, the market would be pulling back, making lower highs and lower lows, and then we'll play a breakout of that previously closed lower high. We are hitting a top over here as well, 56.20, big point of resistance for us. If we can break above that, we might see it run on, but this also might be that decision point where things could reverse. If it does, the indicator will keep us out. As long as we're pulling back and making lower highs, we won't end up pushing into that market. So we'll just simply stay calm, stay rational, stay on the plan, right? It's all about having a plan and executing your plan. Gold, we're looking for short opportunities. Fell off quite a bit last night. Didn't get me into a trade yesterday. We can see the market did make the higher lows. Let's pull over here. The market did make the higher lows and higher highs, higher lows, higher highs, but this was after my my scheduled cutoff time. So it ultimately did break down, and this trade would have pushed on depending what time of day you're watching it. But for me, no trade yesterday on gold because it was past the time period that we would have traded it. But we are back into a short bias, so we're looking for short trading opportunities that'll look like the market pushing higher, making higher lows and higher highs, and then we'll play a breakout in the short direction if it breaks back down below the previously closed lower high. Of course, with everything, we take the good with the bad. We track everything. It either does well or it doesn't. But the only way to really find your consistency is to have a plan and consistently follow it. And the only way to have a plan that you can consistently follow is to have a very rules-based plan that has quantifiable reasons for why you're doing what you're doing. And that's what the BTX method here gives you. It gives you that quantifiable reason for why you're either entering a trade or why you're staying out of a trade. It's really, I can't think of a more simple way to approach the market. So anyway, that's it for me. I'm gonna leave it here. If we have some tradable opportunities and we come back for tomorrow's morning session, we'll talk about what those look like, what they are, and how things played out. All right, so that's it for me. Have a great